Good afternoon, traders. Good afternoon. My name is Raul Rivera. I am the founder of themarketprofile.com. Today is Thursday, August 31st, 2017, end of the month. And tomorrow we begin a brand new month, and the first day happens to be Friday. So we have the non-farm payrolls number due at 8:30 a.m. Eastern Time. It's going to be one of the biggest news events of the month of September, and we're getting it right away at the beginning. So let's take a look at some profiles here. Today we had a let me switch it up. There we go. So today we had a pretty decent day. I mean, it was a losing day, but going out with a bang at least. We know that the month of August has not been the easiest month to trade, where all the volatility just came in and just changed the whole fundamentals and structure of the market, and everybody's trying to adapt. Some people were thankful for this month. Some of us were caught a little bit off guard, but we managed to do what we do best, and that's to trade. So here in the S&P 500, we had a couple areas we really wanted to get into, and the idea today was to get long. Just doesn't matter how you do it, just find a place to get long. That was the idea. We tried getting long here at VWAP early in the session, 24.60 and a quarter. The very low on this little annoying bar happens to be 24.60 with 50 cents, 24.60 with 60 cents, 50 cents, excuse me. So one tick pretty much from where we were looking to get filled here around 24.60 and a quarter. So I missed that one. I'm like, you know what? I'm just going to leave it be. I know the market's probably going to continue to rally, but this just goes to show, this month is just weird, because every single month we've had in the past, we usually tend to sell on the last day of the month. We usually tend to rally on the first day of the month. That's how things work. Managers are getting out of their positions for the month, and whatever positions it's almost like a rotation, getting out at the end of the month, getting into new positions at the beginning of the month. I don't know, it's just a behavior that these institutions like to do, right? Can't just explain it, but I figured today we'd probably rally rather than sell, because the month of August, or at least after the 10th of August, everything's just been opposite day, right? Hey, North Korea launches a rocket, get the market going higher, right? Things like that, it just doesn't make any sense. So here in the S&P, tried to get long the VWAP trade. We had a very small P-shaped distribution here, followed by a P. The idea was to find a place to buy it, right? P-shaped distributions simply mean that we have a trending up pattern. And here we can see this was what we saw early this morning. Here's the first P. Here's the second P. Find a place to buy. We tried 60 and a quarter. Market, the low of that in that period of that bar was 24.60.50. So we missed it by one tick. Would have been a decent trade. Tried to get short. We were looking for the short side here at 24.69 to 71. I had figured this would be an excellent area to start shorting, but then again, I decided not to take the short, because every time I take the short in the S&P, I get whacked. And today, of course, one of those sessions where I don't take the trade and it actually works out. From 24.69, it drops at most 6 points, right? That's the most anybody could have ever made, shorting at 69, down to this low, 6 points at the most. Very decent trade. Anywhere from 3 to 5 points, I think, is always a good place to start taking profits. So with 6 points possible, this was a pretty decent trade. Then the market came back, and there is no such thing as a double top. Okay, if there is, it's very rare, but there's almost never ever a double top. Here we made a double top, and shortly after it gets crushed, right? So when we test resistance or support for the first time, we're usually gonna get a reaction, right? When we go for it again on the second try, there's a higher probability that we break through that support or resistance level. That's exactly what happened here. We broke right through it, traded higher, and now pulling back again because there's just resistance up here, right? What happened is they probably ran some stops above, and that was it. So no trades were made here in the S&P 500. I know one of our members, using our cumulative tick, I assume he's been really into our order flow indicators using the cumulative tick. Again, I'm just assuming he's looking at the institutional traders and he just follows along with them. He managed to make a really good 7 points in the market today, and hats to him. Great job. Next market here, we got the crude oil market, and this is another one where it's just opposite day, right? We begin distributing sideways. We're still looking for the short side rather than the long side, simply because of Hurricane Harvey and everything that it's doing to the oil supply and gasoline supplies and everything, and all the refineries shutting down. So early this morning, we really came in with a bias to sell. We found ourselves in a D-shaped distribution, and actually this would be part of the D-shaped distribution. So you can see here, normal distribution. We were looking to short 46.40 to 50. I did take the short here, and I got squeezed. Also here was another area to get short, but the way this month has been going, adding to losing positions, it just has not worked, for 7 straight months. And I keep saying this because you just can't compare 1 month to 7 months. 7 months is a long stretch versus this month just being acting like a wacko. Adding to losing positions has not been working this month, so I didn't add at 75 to 85. I actually took the loss around 46.70, about 30 ticks of loss here on quite a few contracts. So took a little bit of a loss here in the crude oil market, trying to short here. The trade was good. You can see during A period it did trade as low as 46.30. I was short 44, so it had a few good ticks of profit before it reversed higher. And what happened was I got caught in a news announcement, right? And that's always a risk in trading, but it seems like that risk has increased this month, again, prior to other months, right? This month, North Korea was all over the place. Trump is, threatening to shut down the government. You have Hurricane Harvey. It's just a ton of things that are just, clumping together and just, blowing up. It's what's happening here. It's weird, but it is what it is. So here on this bar here, this one was the one that killed it all. It just exploded to the upside. There was an announcement that said that 500,000 barrels of crude oil are gonna get released from private reserves or something like that, pretty much decreasing the supply of crude oil and sending it over to refineries in order to sort of stabilize gasoline prices, because gasoline futures have been up like at least 20% in the past week. Okay, in the past 7 days it's been up over 20%. That's a pretty big jump. People will definitely feel that in their when they go to fill up their gas tanks over the weekend. So they're releasing crude oil, so decreasing the crude oil supply, and obviously it's going to be used to fulfill some increased production in refineries that are not in Texas, to try and stabilize prices. So that decrease in supply of crude oil, for some reason, is a good enough reason to rally the market. It's just unbelievable. We've had 5 straight weeks, okay? 5 straight weeks of inventory draws, okay? You guys can go to the Department of Energy and then see exactly what I'm talking about. 5 straight weekly draws, okay, of millions and millions of barrels. Prices on crude oil continue to go lower and lower and lower. Suddenly, they decide to, decrease the oil supply from a private reserve, and that's good enough to rally the market this much. You know, things like it just doesn't make sense. It just doesn't make sense. And I think if it doesn't make sense, it's a good thing, right? If it doesn't make sense, just buy it. Okay, that's simply what's going on in the markets right now. If it doesn't make sense, buy it. So I took a losing trade here in crude oil. Again, the idea was to be short, but I got caught in a news announcement. All right, next up we got gold. Switch it up here. I think this is the button. Okay, we got gold. I took a small trade here in gold, very, very small trade, 3 contracts. So overnight, we tested a level that I had picked out for yesterday. So yesterday we consolidated. I was looking to get long down here between 1305 and 1302. So about a 3-point range or so, and we didn't quite get to it. I was trying to get short up here between 23.5 and 25. Again, yesterday didn't quite get to it, so I left those areas there, right? I left them there to see if they get tested. This bottom one happens to be the low of the day. We found support at that level in the overnight session and just rallied to the upside for the rest of the day. Pretty insane. I took a short right here at this level. This was a brand new short area using yesterday's value area, plus if we split this profile into 2, right there, we can see we got some value area resistance there as well. Now the trade worked out for as good as, I believe, 1.5 points before it took off. And again, on a day where the S&P 500 is rallying, I find it very weird that the gold market is also moving to the upside. We have negative 400 imbalance early this morning. It was about negative 2,000. And when we take a look here at the institutional order flow, they were definitely selling the market early in the morning, stabilizing, and then they started the buying again, which is, just games is what it seems is what they're playing here. So that was the trade. Took a small trade here, 3 contracts, took them off for a 3-point loss on this trade here in gold. As you can see, I didn't add to my positions at all. I figured, if it's gonna rally, it's probably gonna rally for the rest of the day, and look, that's exactly what happened. Same thing with crude oil. Why add to a position that's probably gonna continue to rally? The month of August has seriously been the month of trends. Almost every single day, it seems like the markets, or at least one of the markets I look at, is trending from high to low nonstop. Okay, taking a look here at the 30-year bond. This level we've been trying to short forever. Didn't quite make it there. Okay, we were trying to short 56, 10 to 14, 10 to 14. Really? There. 10 to 14 short, and trying to get long 55.03 to 55.06. Didn't quite make it there. Early in the session, we did have an inside day. When I split the distributions, this is what we saw earlier this morning. Again, more sellers and buyers, and a selling pattern as well. Here's the open, traded lower, consolidated, B-shaped distribution, but it looks like we just broke that this downtrend and created an uptrend, as you can see. Ended the day in a P-shaped distribution. So a lot of indecision is what I'm seeing here in today's market in the 30-year. So it was an inside day, so I tried to short up here. 156, I did get filled. The trade was good for about 6 points at its best. I ended up taking it off for 2 ticks profit, which wasn't really that much, but a profitable trade nonetheless. And the reason I got short of 156, it's an inside day. So when it's an inside day, the range of today's trading is inside the previous day's range. What we want to do is get short just above the highs and get long just below the lows using these green and red areas. that you could see, highlighted above a profile and below a profile. And as soon as I started seeing that gold was just starting to trend to the upside, I said to myself, I need to get out of the 30-year right away. This is, something is brewing here, and there it is. I mean, P-shaped distribution ended up trading higher, and obviously well above where I entered the market. So that was the trade in the 30-year. Try to get short just above. Worked for a couple of ticks. Not a trade to really be proud of in a sense. It was more of a I need to get out in a panic type of thing. And as you can see, early this morning, this number right now is negative 64, but earlier this morning was negative 2,000. Can't remember the real number, but it was in the 2000s. And same thing with gold. I mean, they sold them overnight and then they rally them in the morning. Very, very strange. But it's what's the strangest part is that we're seeing gold, the 30-year, and the U.S. indices all trading higher, while volatility just continues to get crushed. It's the new wave. I mean, I don't understand it, but I'm just gonna have to get used to it, right? What I have to do now is just continue to adapt to these new market conditions. Continue taking my trades, but at the same time knowing that I should have pretty good stops and pretty good tight stops, like I had in what was the trade here in gold, and also pretty much stop adding to the losing positions, because it's just not working right now, right? It's just not working right now. Anyways, guys, really all the time I have for today. I hope everybody enjoyed today's video. If you did, make sure you guys click like if you're on Facebook, or leave me a comment, and I'll reply to it as soon as I can. I'd like to invite you guys to a 14-day free trial of my live trading room, www.themarketprofile.com. Claim your 14-day free trial. See how I trade every single day. Tomorrow we got the non-farm payrolls. If you guys sign up, you guys can see me watch me trade live, real time, the non-farm payrolls report. I always try to trade it before the fact and after the fact, using various different trading strategies. So swing along and claim your 14-day free trial risk-free, and see if this is something for you. Anyways, I hope everybody has a great evening, and I will see everybody again bright and early tomorrow. And again, if you guys sign up for the trading room, I will see you bright and early for the non-farm payrolls. Take care, everyone.